All right, so we're back again. Excuse me, please. So we're back again. All right, to this series of classes. All right, so we're starting with market structure. Market structure. Structure is everything. Structure is important. You need to understand market structure before you know where to enter from. Okay, so it's simple. All right, so let's look at market structure. We'll be looking at market structure, and we'll also look at the Hago market structure, and this is the foundation of trading. Okay, I call market structure the foundation of trading. You need to understand structure. Okay, there are other add-ons. All right, so let's look at market structure. Now, basically, there are two types of market. And I call them number one, a trending market, and number two is the ranging market. So these are the two types of market that we have. Okay, so trending market and a ranging market. Under the trending market could either be bullish or bearish market. So when we say bullish, we mean the buying market, the market that is buying. Okay, and when we say bearish, we mean a market that is selling. All right. So that is just it. So these are the two types of market that we have. Nothing more than this. These are the two types of market that we have. You have the ranging market and you have the trending market. So under the trending market, markets could either be bullish or it could be bearish. That is, it could either be buying or selling. Okay, a ranging market is also known as accumulation or consolidation. All right, so you don't want to get trapped in the consolidating market. All right, so let's look at these two types of market and we'll journey from there. All right, so what is a trending market? Okay, so basic market structure. So what is the characteristic, or what are the characteristics of a trending market? All right, so when we say market is trending, like we said earlier, it could either be buying, that is bullish, or bearish. You don't want to be buying and selling a pair at the same time. It is stupidity. That is why you need to understand structure, you need to understand market trend. So you will know where to focus your energy. I've seen traders do that shit, buying and selling at the same time. It is rubbish. All right, so when the market is buying, that is when the market is bullish, it is printing what we call higher high, HH. I will just use the acronym, and higher low. Okay, higher highs, higher lows. When the market is bearish, it's gonna print what we call lower high and lower low. Okay, so what is higher high? What is higher low? So when the market is bullish, we say market is buying. And how do we know that a market is buying? You see it printing higher highs and higher lows, and vice versa. For a bearish market, it will print lower highs and lower lows. All right, so what does it look like? So what is higher high? So when the market is bullish, it is buying, it is going upward. All right, so we have this. You have this low, this high, and you have another low. So this is higher low, you have higher high, higher low, higher high, higher low, higher high, higher low. Market keep creating new highs. Market keep creating new highs. Okay, so this high is an higher high, higher high. Okay, and this low here is higher low, higher low. All right, so we have this high also higher high. Each of the highs, they are higher highs, higher high, higher low. Okay, all right, so each of the highs, they are higher highs and higher lows, higher highs. So you see price keep breaking highs. The moment price keep breaking highs, it means price is bullish. It means price is bullish. Okay, creating higher highs, creating higher lows. All right, higher high and higher low. Structure is everything. Like I said, you need to understand the trend of the market. Structure shows you the trend of the market. Okay, so higher highs, higher highs, higher lows, and lastly higher high and higher low. So you need to understand that when market is buying, it creates, how will I know if the market is buying? It will create higher highs and higher lows, higher highs, higher lows. Okay, this is how you will know the price is buying. You see that the highs are being broken and the lows are being protected. Higher lows are being protected. Price is not going below the higher lows. Price keep breaking highs. It keeps breaking highs. So that is how you know that this market is bullish. Okay, so please pay attention to that. So this is for a bullish market. Please note that. So when you see market going this form, it means market is bullish. Bullish market. Okay, so you see market going to the upside. That's bullish. All right. So on the flip side, on the flip side is the bearish market. Okay, so on the flip side, all right, so we have the bearish. This is for the bullish market. All right, so let's flip it. So this is bearish market now. Okay, bearish market, bearish market. So you see market going downwards. Okay, so like we said earlier, in a bearish market, price creates lower highs and lower lows. Okay, I'm just gonna change all this. Lower highs, lower lows, lower highs, lower lows. That is how you will know that this market is bearish. Price keep breaking lows, price keep breaking the lows. That is how you will know that this market is bearish. And it is always good for you to follow the trend of the market. Don't ever get trapped in trading against the trend. You could trade against the trend and you get away with it, but you will not always get away with it. It's simple. All right. So for the bearish trend or for a bearish market, you see price keep breaking the lows, the lower lows. Price keep going below the lower lows. That is how you know that the market is bearish. Okay, that is how you know that market is bearish. So please pay attention to that. The lower highs are being protected. Price is not going above the lower highs. Price keep breaking the lower lows. Okay, so in a downtrend, the lower highs are being protected and the lower lows are weak point. Okay, so we have what we call strong point and weak point. The strong point are the lower highs in a bearish trend, and the weak point are the lower lows in the bearish trend. Okay, so what it means is that price will keep taking out the lower lows because they are weak points in a bearish trend. Okay, and price will keep respecting the lower highs in a bearish trend. So this is basic market structure. All right, so let's put that on the side. All right, so let's quickly talk about something else which I call algo market structure. All right, let's talk about algo market structure before we look into other things. So let's talk about algo market structure. Um, algo market structure. All right. All right. So we have what we call the algo market structure, and I'll talk about that in the next class, the next video. All right. Thank you.